Friday, June 8th, 2018. Very little happened this week. Rates stayed the same. On pause, waiting for a 5-ring circus, which is beginning right now. And the 5 rings are the G7 meeting in Canada. On Tuesday, 2 things: the Kim-Trump summit and the European Central Bank meet that day. On Wednesday, the Fed concludes a meeting, and Chair Powell will have a press conference and a whole bunch of new projections. And on Thursday, the Bank of Japan meets. Before I handicap all 5 rings of the circus, as the copy next to this video says, continuing the beaten-to-death metaphor of the circus, a retired lion tamer has just walked into the center ring of the circus, accompanied by an odd-looking dog. Ben Bernanke, out of retirement yesterday, announced that the tax cuts and spending stimulus are going to run the economy too hot and will run completely out of gas in 2020, when he said, at that moment, we will look like Wile E. Coyote going over the cliff. That doesn't sound like the Ben Bernanke I used to know. He may modify what he said later, or maybe not. But anyhow, that thought will have some impact on us as we go forward. Back to the 5-ring circus. The G7 meeting in Canada, the G7 nations, and I'll forget one of them, are the United Kingdom, France, Italy, Germany, Japan, the United States, and Canada. And the group is the group that either won or lost World War II and took a vow never to do it again. And ever since, for kids in the audience, World War II ended in 1945, a long time ago, 70 years ago. That group of nations collectively has been known as the West, and has been the center of global economic competition. And it's not an accident that in the 73 years since, we have not had a repeat event of something like the Great Depression. Arguably the central cause of the Great Depression was a breakdown in global cooperation at the end of the 1920s. The meeting is significant because of the tariff arguments that are underway. Mr. Trump is easily the most disliked American president ever overseas. Not just by the leaders, but by the people as well. And we'll see. So far, the meeting began today. There is no change in Trump's position. He intends to go it alone. Tuesday, the Kim meeting, handicappers, I think, agree that it's likely to be a non-event. There'll be all kinds of talk and so on, but Kim's not going to surrender, and we're probably not going to walk out. However, given the volatility of the individuals involved, it's hard to tell how it turns out. If it is unpleasant, international freight pushes money to American bonds. If it turns out to be a bad news deal, it's likely to be good for interest rates. It's a high price to pay, but sometimes that's the way it works. The European Central Bank meets the same day. The ECB is still tremendously stimulative. The ECB is maintaining the overnight cost of money at negative 0.4%. And is still buying 30 billion euros worth of European IOUs every month. So it strikes me as more than a little silly to talk about a European economic recovery if the ECB is still that stimulative. If the ECB begins to back away from that stimulus, being in theory, that would push interest rates up because the ECB is not buying bonds anymore. But on the other hand, if the ECB is pulling away from stimulus, that means the European economy is back at risk. And the first little signals out of Europe, if anything, exerted downward pressure on rates. The Fed on Wednesday is the big deal, the huge deal. The Fed on Wednesday will take the overnight cost of money in the United States from 1.75% to 2%. That will, among other things, cause the prime rate to go to 5, which will be awkward news for many people with home equity lines of credit. 5% will be the highest prime interest rate since 2008. Question, at 2% is now a big deal about, Chair Powell is going to be asked, are you done? How close are you to being done? The Fed has a notion of a neutral rate of interest, at which the Fed is neither tight nor easy. And the wigwags out of the Fed say that that rate is in the general vicinity of 2.5. 2 more rate hikes. There's one more forecast this fall, another one early next year. 2 more rate hikes, and that would say that the Fed is done. The Fed's just going to neutral. It's not trying to hurt anybody. Powell's going to be asked. Will the Fed go beyond neutral and try to slow down an overheating economy before Wile E. Coyote goes over the cliff? Somebody's going to ask Powell. My hunch is that the net effect is going to be Fed hikes 0.25%, but mortgage rates and long-term rates don't rise that much. The yield curve will flatten some more. If it doesn't, if they all rise together, it's an indication that Powell and company intend to go farther than neutral. Maybe that the economy is so hot that they will have to. But my hunch is that we make it through Wednesday intact. Mortgage rates rise a little bit, but don't go through 5. Not yet. Thursday, the Bank of Japan meets, and for once, nobody cares. In Japan, there's nothing left except the custodians sweeping up after the elephants. They're in so much trouble that they can't stop doing what they're doing. And no matter what they say, probably not much effect here, but they have the ability to surprise. But of all of those days, the big deal is mid-afternoon on Wednesday, as we digest what the Fed has done, and whether they are close to stopping. And that would be good news for housing, I think, all around. Good weekend.